Is the stock market going to crash the first week of January? That's the big question that everybody should be asking themselves. When we take a look at the price action on Friday, the 27th, it looked like a rug pull for the market, but could it in fact be a bear trap? We don't know. We don't know yet. All we can do is rely upon a couple of things. One, the path of least resistance remains to the upside. Two, light volume trading days, especially on or during a holiday season, are the worst times possible to make macro bets on your portfolio. So what we're going to do today is we're going to focus on a mix of long stocks, a mix of stocks where we're looking to sell premium against, meaning sell options to generate cash flow. And I also have a couple of beaten up names that I'm interested in, LEN and NBR, neighbors, and that's in the energy patch, LEN in the home building patch. And we also have names out there in the internet security space, CyberArk, CYBR, and Fortnite as well, FTNT. And lastly, a call spread setup on AVGO, Broadcom. And that's more of a bearish bet on AVGO. Don't get me wrong, great company. Am I concerned about a potential breakout in the semi names going into the new year? Sure. Would that work against our trade? Sure. That's why I'm not looking to short it outright. I'm looking to sell a call spread with an 80% probability of profit. So before we get into it, let's talk about our sponsor really quick. Our sponsor is TrendSpider. Folks, if you're not using TrendSpider and its automated technical analysis, you're missing an arrow in your quiver. Were you an archer? I have been an advocate of theirs since 2017, an authorized reseller since then, and I can tell you that they are selling subscriptions hand over fist because they offer the next new thing seemingly almost every month, whether it be trade bots, whether it be automated technical analysis, meaning automated trend lines, pattern recognition, fundamental analysis now. And of course, the most recent is their AI-based trading model. Folks, I believe in it so much, I give it away free to our silver and gold level members, to the contrarian trader. If you're not ready to sign up to become a full-fledged member, that's fine. At least take advantage of the minimum 35% discount code that I get you using my link below if you're watching this on YouTube, above on Twitter. And if you sign up for the 14-day free trial offer, I mean, just by virtue of the fact that you're getting TrendSpider, my services really come free of charge. So please take advantage. Go into the new year with the Bloomberg Terminal for retail traders. Now let's get to our watch stocks for the new trading week. Now, I screened for most of these names using the scanner on TrendSpider, and I came up with about 20 different names. I narrowed them down to only a few. And what I did is I scanned using a chart of companies with rising profit estimates. These are your top tier names. And in fact, what I did is in our Bull and Bear Banter chat room, I posted the entire list that I screened. And that is, of course, posted in our chat room. If you're not a member of our chat room, it's very inexpensive. $9.99 per month, and you get a discount if you sign up for the annual version. You have a great group of people in there. We share a lot of information. It's very, very professional, and I hope to see you on the other side. Let's get to it. The first name is CYBR. Why do we like it? Well, it's a growth stock, rising profit estimates. The path of least resistance on this weekly chart is clear. It's defined. It's to the upside. We closed up on the week last week. One could argue that we broke out, and there you have it. Argument over. CYBR, bullish, breakout. Now, I will caution, before I go any further with talking bullish about any stocks out there, I am not bullish on the overall market. You saw the yield curve, which we'll be talking about tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. The yield curve is skyrocketing, and that does not bode well for equity traders. That being said, the path of least resistance for the markets remains higher until it doesn't. Back to CyberArk weekly chart. Volume could have been a little bit better last week, but it was a holiday week, so we need to give it a pass. Now, while we have a clear and defined uptrend, the one thing that we want to do is we want to take advantage of the automated trend lines to identify, do we have support below? Do we have resistance above? Do we run the risk of buying this stock into resistance exactly where we don't want to be buying the shares? Let's click a button. Boom. And you can see that last week we did a retest of a breakout point, meaning they tried to take us down the week of December the 16th. We popped back up by the end of the week. Last week, they did a retest of the lower band of support. I see resistance up at 327.58. Then thereafter, 334.48. Members, I'm going to be putting in the members area to the contrarian trader, our entry points, stop points, and price targets on all of these names. Daily view, a very nice consolidation here on CYBR, but let's not forget, yet again, we have resistance above. So fair warning. So this is one where we may just want to entertain scalping a profit to the long side on, and then waiting and see whether or not we clear these hurdles above and then reestablish a long position, because after that, you really have no, let's go to a monthly chart, no overhead supply. If you want to argue that this red band here could act as a rising upper band of resistance, okay, that's fine, but that's above $400 per share. So I'm not going to worry about that right now. That's a luxury problem to have if we're so lucky as to see these shares move up higher. Now, taking a look at the seasonality of CYBR, we have data which only goes back 10 years. The month of December is by far the worst month out of the year. The however is that when you get into first almost half of the year, clearly the first quarter, it's by far the best quarter or the best time sequentially month over month to be owning the shares of CYBR. So let's say that you don't want to buy the shares outright. Maybe this is a great environment in which to sell premiums, sell puts. If you're concerned about the macro health of the overall market, then you sell a iron condor. Be more neutral. But seasonality here on CYBR looks very, very favorable. And then when we take a look at the final week of the year, week 52, that's up 64% of the time. And then, as mentioned earlier, as we proceed into Q1 2025, clearly seasonality favors. So again, members, we'll be putting entry points, stop points, and price targets in the members area. That should be updated by Sunday morning. Now, the next chart up is Fortnite, FTNT, the symbol. The path of least resistance, it's clear, it's defined. We're stair-stepping up higher, a very healthy chart, and it's got strong fundamentals, as does CYBR. However, we are very extended on the weekly stochastics. Does that mean that the stock corrects definitely? No, by no stretch of the imagination. It just means that there's a threat out there that we could take a pause. Now, the one thing that is encouraging is that we've just been consolidating for several weeks now. We had this big gap up, another rally the week of November the 11th, a little bit of a fade, and then we dropped into a trading range. So to me, while the past 3 weeks have been down, we did not put in new weekly lower lows last week. A new weekly closing low, yes. But intra-week lows, no, we did not. Let's take a quick peek at a monthly chart to see whether or not we have overhead supply. We do. Overhead supply above. So you may be saying the stock is at all-time highs. How is it possible that we have overhead supply? It's pretty easy. They're extrapolating. The algorithm is extrapolating out prior peaks, prior resistance levels, all the way up and into these new all-time highs. Not to mention, you have some data here which is calculated that gets factored in as well. So at current, we have managed to close above a resistance level, bullish. Does that mean that we continue up higher? Quite possibly, yes. If the market holds up, we could see a rally all the way up to 106 per share, if not higher. But are we ready to enter this trade yet? Daily view. We have a Bollinger Band squeeze forming on a daily chart. Bollinger Bands in red, Keltner channels in green. I'll create a synopsis for you of what this all means to save you the technical jargon. Generally, the Bollinger Bands trade outside of the Keltner channels. When they trade inside the Keltner channels, that means that there's a tremendous amount of energy getting pent up. Now, there's no guarantee that the energy results in buying energy. It could result in selling energy for all we know. So how do we divine? How do we position ourselves to take advantage of the probability of a breakout? You use a couple of things. Actually, three things. One, fundamentals. Company's got strong fundamentals. So the probability of the share price continuing to press up higher is very, very good, especially if the overall market continues to press up higher. Two, what is the general trend of the stock? It's up. It's in a bull market. So the path of least resistance remains to the upside. Odds favor bulls. Lastly, how are our moving averages stacked? Do we have the shorter duration moving averages, 5, 10 period moving average, trading above the 15, 20 period moving averages? Check that box. At current, though, I will point out that we are trading down below the 20 period moving average in green. So I think that this should fire off to the upside. What I will do here is I will create an alert which will act as a tripwire, letting me know that we have a potential close above that 20 period moving average and above prior resistance levels. And that might be the all clear for us to buy the stock. And we'll keep this active for a few days. 15 days will do. And there you have it. So at current, it is Saturday, and we're already planning our week for next week. And that's what you should be doing. Avoid impulse trading and formulate your strategies during the weekend or after hours. And I've already put out to members the week ahead strategy session. That went out this morning. So members, if you haven't checked it out, please check that out. Okay, so the next stock is Broadcom. Now, Broadcom has released earnings. They did so a couple of weeks ago. Strong earnings resulting in this powerful move up higher. The week of December the 16th, we saw a bearish key reversal bar. Last week, we got no follow through to the downside. So that shows the underlying strength of the share price. The problem for Broadcom is that you can see here the Bollinger Bands I have modified not for a 2 standard deviation move, but a 3 standard deviation move. So in short, we're really not supposed to be up here. Usually when you test the 3rd standard deviation Bollinger Band, you trade sideways for a few weeks, if not correct. And you have a reversion to the mean. So am I looking to buy AVGO or short AVGO here? Neither. I don't want to buy it. I don't want to short it. What I want to do is I want to sell a call spread. Meaning I want to sell a, let's call it a 20 delta call. And that just means that you're selling an option, a call option. That moves 20 cents on the dollar for every move that the stock price moves. And then I want to simultaneously buy an option immediately above that call option, just in case I get challenged to the upside. I have an insurance policy that creates not an undefined risk, which is what selling naked calls brings you, but by buying that option, I create a defined risk trade. I know exactly the maximum amount I am able to lose or possibly could lose before I enter the trade. So my guess is here, or my bet is here, is that either A, we're going to trade sideways, or B, we're going to pull back, thus resulting in profitability for that call spread that I sold because of time decay. And if it pulls back, extrinsic value. Now you can see on this weekly chart, we have no overhead supply. Monthly chart, very powerful move. But again, we're up at that 3rd standard deviation move. It just means that we're just going to get a reaction probably to the downside. Here's a daily chart. You can see that we've formed some overhead supply here, up at around 255 per share. And then after that at around 262. So we're approaching this short trade of Broadcom with a lot of respect. We're not shorting the common stock. We're selling a deep out of the money call spread. It's what I like to call over the horizon trading, meaning I'm not going to short the common stock and get burnt right away. I would rather play the probabilities of selling out of the money premium and generating cash flow in this kind of market environment until we get a resolution to what this market environment is going to look like in the first couple of weeks of 2025. We have no clue yet. All we know is that we have a yield curve which is rapidly advancing into a red zone, and we have the valuations of this market, both in the rearview mirror and a forward-looking basis, extremely expensive. Now, being a contrarian, I look for opportunities that nobody else really wants to look at. And one of those situations I'm seeing here is with LENAR. Clearly, the trend is broken. Let's go to a weekly chart. We hit resistance. This is the power of these automated trend lines. If you were long of LENAR and you had this automation, you hit this upper band of resistance, you would have known, you know what, we have a lot of sellers above. Let's get out, because this resistance marked resistance back here, not quite here, but here and back here and back here. I'm sure I can go back further in time and find where that's been a graveyard for longs in the past. Now we see that the path of least resistance for LENAR is clearly to the downside. This is a weekly chart. The week before last, we smashed through this lower band of support. Last week we had a check back and a failure to recapture that support level. I still think LENAR goes lower. Here's the daily chart. You can see we have RSI at around 15. And yes, it's oversold, but that by no stretch of the imagination implies that it's done going down. It can go down below 10 on RSI. I've seen it many, many times. Not only LENAR in particular, but other stocks. And when you take a look at the price action here on LENAR last week and the week before, this is a major gap down. And this is what you call a shelf. All they keep doing is trying to rally it, rejection, rally, rejection. At that 139.42 mark, I think that ultimately this gets resolved down and we hit support. So members, again, with all these stocks, I'll be entering my price at which we want to look to buy. I will not be buying on Monday morning unless, of course, it hits the support level we're looking to enter. And, of course, we will be discussing price targets. And the price targets, this could quite very well be our price target. We don't know yet, and a little bit more analysis needs to get done. But if we get a healthy pullback from these current levels, well, then we may just be looking for a rally back up and into 139.42 as our profit zone. So more to come on that, members. I will be updating the members area with, again, price target, stop points, and entry points. Let's check out seasonality here on LENAR. So the month of December historically is a good one going back 50 years. Clearly, this December was one of the exceptions. Now, January is the third best month out of the year for LENAR. Let's take a look at a weekly view. And, I'm looking at the seasonality here. And when I see 50-50, 55-45, those are not great odds. As an options trader, I don't like 50-50 odds. I think those are terrible odds. These are more appealing to me. The first 2 weeks of January, probability of an up move. The first week, 68%. Second week, 74%. So those are a lot more enticing to me. So seasonality looks pretty interesting here for LENAR going into the new year. Now, I want to head back and I want to talk about AVGO and seasonality. I skipped over that. And I get asked the question quite often, what version of TrendSpider do I get if I sign up for your version or your free version of TrendSpider? You get exactly what I'm using. I use the version that our members get. That way I stay in tune with the upgrades and making sure that our members get all the functionality that they should be getting because we negotiated a deal with TrendSpider. And they're very good with honoring that deal. So taking a look at the seasonality, the month of December up 75% of the time. January 67%. February is the third best month out of the year other than May and November. So it wouldn't make sense to go, if you were just going to base your trade simply upon seasonality, which you shouldn't do. It should be a part of your decision making. It may influence your position sizing, but it makes sense given this data that we have to sell a call spread rather than just simply to short the common stock or to buy puts. And taking a look at the final week out of the year, up 56% of the time, and that trends up. The first several weeks of the new year, it looks as though you get institutional inflows into AVGO. And honestly, I'm now thinking more. Maybe I should hedge my call spread with perhaps a put spread as well. So that's something to ponder. Members will be talking more about that if we do enter this trade. Moving on to Neighbors. This is an energy stock. The sector is not loved, and that's why we like it. Let's go to a weekly view. You can see the trend. It's clear. It's defined. It's down. So odds favor bears. There's a problem, though. We have support down in the mid-30s to high 20s. So that's the area in which I'm going to be looking to build a long position. And it's going to probably be a fairly large one. Why? Simple. Same thing as with Lennar. Here's the daily chart of Neighbors. RSI is at around 12. So if you're showing me RSI sub 10 and we're bouncing off of weekly and daily support levels historically on Neighbors, well then I'm an aggressive buyer at those levels. But not before. We want buyers of like mind to be stepping into the breach with us and buying these shares. Where will we find those buyers? It's not going to be in the middle of a trading range. It's going to be at historical support levels. Patience, patience. Let's check out seasonality. So going back 31 years, a lot of data here. The beginning of the year is a coin flip. Then once you get into March and April, then things look a bit brighter. Let's take a look at a weekly view. Yeah, this is all a coin flip with a bias to the downside going into the new year as measured by seasonality. So no great rush to go buying this stock. But I will be posting the historical support levels at which I plan on buying pretty aggressively in the members area, along with price targets and stop loss points. If you're not currently a member, please sign up. 14-day free trial offer. I've been around since 2005 and a partner with TrendSpider since 2017. So we have a lot of credibility in the investing community, and I completely understand if you're not ready yet. At least the takeaway you should get here is that TrendSpider is an invaluable tool. You should have it in your arsenal. Start the new year off right. Get a bare minimum. Head on over. Use that link below. Get a 35% discount code, bare minimum. They may even have a better deal for you. Just use that link below. Help support the channel. If you're watching us on Twitter, use the link above and get all the functionality that I just demonstrated included with your memberships. Everybody have a profitable trading week and a really, really happy new year. God bless and be well.